Welcome to BAM It with John Michael and Mari, covering all things business, accounting, management, marketing, and IT, the place where businesses and entrepreneurs find the forest through the trees.
Hello and welcome to BAM It. This is Mari Peterson with Marketing Outpost, and of course we have with us
John Michael Kledis with Peridot Consulting.
So today's episode, we are going to continue a discussion we had on the last episode, which was about fraud. But this time we're going to take a deeper dive into being a certified fraud examiner, what that entails, how you get that certification, what they do in their process, and maybe some example and sample stories from John Michael Kledis, who is a certified fraud examiner. But first, let's open up with a quick, interesting fact about certified fraud examiners, or what, the association?
Yeah, the Association of Certified Fraud Examiners. It's a relatively large organization. Right now, there's 85,000 members in the ACFE, give or take. And, there's some specifics in fraud examinations, but the CFE credential is kind of rising to the top as one of the most admired fraud credential. It's very focused. They do a journal. They do a report to the nation every year, this association on fraud, and it's international. It's an international certification. It's not specific to the United States or to a state.
How does one become a member?
Well, you become a member of the ACFE. You can join by paying, but to become a CFE, you have to go through some hoops. You do have to have a college degree to be a CFE. You have to have professional experience working in fraud or related areas, and you have to prove that professional experience. You have to be of high moral character. So in other words, no criminal history or things of that nature. You have to have professionals attest to your credibility and so forth. You have to adhere to a certain code of ethics that they have. You have to pass an examination.
But that's not an easy feat. Tell me about the examination.
Well, it's 4 parts, and
do you do them all at once?
No, you do them independently, but you do 4 parts, and each part focuses on different areas of fraud. And once you pass those, and if you have the right experience,
but don't gloss over that. How hard is it to do those 4 parts? I mean, how many hours is it?
I'm trying to. This was over 5 or 6 years ago when I took it. I want to say it was over 4 or 5 hours per. I mean, it's like over 100 to 150 questions per part.
Do you have continuing ed you have to also maintain?
I do. It's 20 hours a year for that.
Wow, that's a lot of hours.
Is it?
20 hours in addition to all the other things that you have other certifications. So
I do.
How many hours do you spend in all your certifications?
So the certified fraud examiner is 20 hours. The certified valuation analyst is another 20 hours.
That goes a whole week.
Exactly. The enrolled agent, the tax, is 30 hours a year. So that
goes almost 2 weeks of hours.
70 hours a year of continuing education. Now, granted, some may overlap. I can do tax fraud, for example. That would get my tax and the fraud. I can do some business valuation stuff that may or may not overlap with the fraud. So there can be some overlaps, and I try to aim to that a little bit, but also I get some kind of specific things. Ironically, I really enjoy my continuing education. I chose these certifications that I have because it was following my field of interest. My first certification I got was the enrolled agent tax. My core competence, I'm a tax guy. I've been doing tax, for all of my career. But the next certification I got was this certified fraud examiner, and it just really was following a path of interest, a path of me seeing it, a path of seeing the demand, seeing where it can be valuable. It's not like I have to do fraud examinations just for doing internal control consulting or just general consulting with clients and just having the knowledge base. But also, too, when it comes to fraud examinations or the level, what you have to do a fraud examination can be transposed, and it helps out with my business valuations. It helps out with my tax work. knowing how to look at things and how to read things or to be aware of things. So it all kind of bleeds together, and I really love every aspect of it. But the fraud was I initially got into it because the interest level of investigating fraud and learning about it. And I found that when I was getting my certification and I was studying, it wasn't cumbersome. It was so interesting just reading about these fraud cases and these fraud schemes and how to detect and what to look for. It just was so interesting to me, I think.
Have you had some cases, some project work in this or client
Yes.
work where you've been hired specifically for that?
I have.
So tell us without telling us the details, the secret details.
Well,
anything interesting you can share?
Sure. I alluded to one, I think, in the last episode where partnership. There's some elder care I do, some elder care fraud, which is unfortunately prevalent.
What is that?
Somebody's taking care of somebody that's in their late stages of life, and that person tends to start embezzling or taking advantage.
I bet there is a lot of that, unfortunately.
There is, and it's sad because a lot of those go to court, and it really comes down to proving the intent. And if an elder person is manipulated into writing these checks to these people, or they may hire somebody like me to come in, and it may be relatively straightforward for me to say, yeah, this person, was hired at X amount an hour, and per that contract should have been getting $40,000 a year. But if we follow the money, this person in reality got $350,000 a year. And even though you can find the checks and it's all there, these elder may write the checks, or may have been a part of it, or bought an asset for these people, bought a car, or paid their whatever, made them a beneficiary.
What about when it's a family member? Because I'm sure that happens probably even more so.
Well, and it depends on, if they have brothers and sisters involved, yeah. And then you got to come in and say, that's where the lawyers get in and say if there's intent, and they got to prove the intent. It's hard sometimes from a fraud examiner standpoint. We can do that, but it won't be admissible in court for me to come in and say, well, I interviewed the sister. And I mean, potentially, but you really need to bring in attorneys when that happens. When I get involved in court, it's more just an independent saying, this is the money that they got. It's, just black and white accounting of it when it comes to elder care, because there's a lot of, sure, they got $350,000, but maybe the person wanted them to get to $350,000. And that's a whole different level of nuance. But there's, situations where partnerships are a big thing I get brought into. I'm trying to think of
what is the process. So let's say I contact you and I say, hey, John Michael, I see that you have the certified fraud examination certificate. I have a small business. I see some potential issues. What do you do from that point?
Well, it all depends on what information we start with, well, what are you hiring me for if you think something's going on, and what information do you have and what's available? Because it really comes down to what can we do. So if you're like, hey, I think we went to this trade show last week and I think this person pocketed $500 of cash. Well, that's a very minor example, and they probably wouldn't want to hire somebody to investigate that. But at the end of the day, there's very little, techniques that can be done to find that. Or it can be, hey, we've got this office controller that been working here for 10 years. And then there's plenty of techniques that can be done to catch that. And it's going back at the end of the day, it's all about going to the source documents, going to those bank statements, going to those credit card statements, tying those credit card and bank statements to the accounting system, seeing where it ties, seeing where it was entered, seeing where the authorization was. So there's many faceted levels. With the elder care, it's where's the money coming from? Where did it go? It's tracing that. It's a lot of spreadsheet work. It's a lot of, what information do we have? What are we trying to figure out, and piecing the puzzle together? And I enter a lot of my fraud examinations, if not all of them, with ignorance as to how I'm going to conclude on this. I kind of go in and I say, what information do we have? And I kind of start with that. And you just start, it's like creating a sculpture out of marble. You just start chipping away, and pretty soon it starts creating its own figure. And you start with that in a fraud examination. You start with what you can. You start getting into it. You start compiling the information. You start looking for the trends. You start organizing the information you have, and then it will start leading to the next question you want to ask. Oh, I see this bank statement, and I see there's these random transfers every other month going to this account that we don't have access to. What is this account? What do we know anything about this? Let's dig down that rabbit hole. And you can find something there, and then suddenly it starts presenting itself. And before you know it, you got the sculpture in front of you, and it's clear as day. But you had to chip and chip and chip to get to that. So my fraud examinations, by the time you finish, it's a clear-cut report of cause and effect, financial, whatever. But getting into it, sometimes you never know how it's going to end up. And like I said, it always depends on the information you have. If somebody's just like, hey, I think X, Y, and Z is stealing from me, but they don't have anything. They're like, no financials, or it's just an employee that works at the front counter. So are they pocketing cash? Like they get paid 20, they put 5 in their pocket and put 15 in the drawer. You can definitely spot that with with techniques of, well, what does the drawer say the sale was? What was the cash in the drawer? That's the easy part. But if it was all cash sales at like a festival or something, you got to look at surveillance or other techniques like that. And then even a such aspect of fraud examination is interview techniques and interviewing witnesses and stuff. I'm like, look, I want to stick to the financials. If we're going to get into a lawsuit here, I don't want to go in and start interviewing potential witnesses here or potential, perpetrators. If this might go, we need to get an attorney involved from the beginning, because that attorney, like if you hire me to go in and I start willy-nilly talking to potential witnesses and stuff, it could destroy your case because it could be muddied by the actions that I'm honestly taking. Now, if you're doing it for internal purposes and it's not going to go to a lawsuit and you're just trying to figure it out, then sure. So it all depends on the purpose, what you're trying to find. Like if I find something, what is your intent? If you find out this person is stealing, are you going to want to prosecute? Are you going if so, then we need to get in tandem with an attorney from the beginning to make sure that my procedures don't destroy anything. And so there's a lot of things to consider anytime you get into a fraud case, but they can be fun.
So they're fun because there's probably a side of you that likes the investigative aspect of it, because that's always, to me, the fun part. Everybody sees on TV the forensic accounting, like forensic science or whatever, but the accounting side of it. And actually, a lot of it just can be uncovered by simply observation and asking questions.
Well, and I think we alluded to maybe in the prior podcast, fraud schemes, they can be very complex and detailed, but when you kind of take a step back and see what they're doing, it's generally not complex and detailed. What's complex and detailed is the cover up, or like the old adage, and I use this term a lot, you don't know what you don't know. So if you would never think that controller was writing $1,000 check once a week to himself or herself, or it never showed up, or your internal control system wasn't adequate, that it never came to you, you don't know what you don't know. And if you don't know that you're $1,000 short every week, you don't know, the red flag isn't in front of you. But once it's uncovered and you see these checks once a week, $1,000 written to themselves, you're like, my gosh, that was so blatant. But there was so much cover up and manipulation to hide what is a blatant fraud or a blatant theft or misappropriation of assets. So generally the fraud itself is quite trivial. It's the cover up and the hiding, or the process of getting away with it, that becomes
like in the case of Bernie Madoff, and in like the case of our local county manager, it was the creation of a lot of fake invoices.
Yeah.
They even created fake name tags so that they could go on trips, and so would go as somebody else and stuff like that. But that's where it got really complicated, was just the paper trail.
Well, it's funny how a lot of fraud starts out small. It's like, you have to have that fraud triangle. You have to have pressure, like a push as to why that person is going to do it. So either that perpetrator has they want to keep up with the Joneses. They have they feel
they have an expensive hobby.
They have an expensive hobby. They gamble. Who knows? They have external pressure. They have to have an opportunity. They have to be in a position where
And the
it can
opportunity
happen.
is a lot of where there's no internal controls, probably, or
Correct, or they're
very
just
few.
correct, or they got to be in a position where it's like if they are writing checks every day, they probably like it'd be so easy for me to write a check to myself, and they would never know it, opportunity. And then they conclude it with the rationalization.
I've
Well,
earned this,
yeah,
or
it
I
started out
deserve
small.
this.
It's like, oh, the
I'm gonna
pressure's
pay
getting
this
to
back.
me. It's a loan. I'm going to pay it back. It's $500. I need money right now. I've got it. I could write this check. It's no big deal. By the way, I've earned it. I've been working here. I work my butt off. Those guys over there are making 50% more than I'm making, and I do so much more than them. So it shouldn't matter anyways, and they don't care. And if they even found out, they'd probably say I deserve it. So, yeah, I mean, you get into those rationalizations, and then what happens is it happens once. And then that was easy. It happens again. Oh, before you know it, it becomes a dependency. You're dependent on that regular income. You think you suddenly are keeping up with the Joneses, and now you got to stay with the Joneses, and you can't stay with them on your old pay. You got to keep this fraud purpose, and then it becomes self-fulfilling that you've committed this fraud, you got to cover it up, and then you got to cover it up, you commit the more fraud, so it just becomes this snowball. So many fraudsters, when they get caught, they have a moment of relief of it's over. I don't have to keep it up anymore. Madoff, one of his biggest things is he's just so relieved it's over.
I don't know. He seems awfully pathological.
Well, yeah, but I mean, he had to be to do it.
I don't know. Do you think he seems relieved?
Well,
he seems so completely unemotional.
I don't know. I don't want to speak for Madoff, but other fraudsters, when they get caught, there's an essence of relief. You notice that some people you can tell if there's potential fraud. They're the office manager that's really grumpy, really angry all the time, because not only are they protective of what they're doing, but they're also carrying this weight, and it turns them into that hateful, spiteful person at times. And when they finally get rid of that weight by either leaving or getting caught or whatever, it's a huge relief to them. So
I've seen that.
Yeah. So it happens in different ways, but you can tell that it becomes, they have to continue the cover up. They've committed one crime and they got to commit 10 crimes to keep that going. And then they just keep it going because now they're dependent upon it. And before you know it, you're an outright fraudster criminal.
So why is there so much fraud?
It's easy. I mean, I hate to say it, but there's ripe opportunities. There's not very good internal control systems. We said at the beginning of the last episode, 5% of revenues per year on average goes to fraud in some way or the other. I'm sure there's 100% fraud in 100% of organizations. The level of that fraud is where it can be material. Did you take a paperclip home? Technically that's a misappropriation of assets, but it's a paperclip. Or did you, take that credit card and go to Lowe's and rack up?
Or did you take the whole box of paper clips plus 10 cases of paper, plus all the other office supply equipment, and take that home?
Yeah, and you have a side business where
you're reselling your office supplies,
or you're not buying any office supplies because you're just getting them from the current business, and you take home like 3 packets of paper every week. If you get caught once, then they might be like, just stop doing that because it
happens a lot in restaurants with food.
Correct.
Because if you're back kitchen, if you're not monitoring the inventory of what you're taking and what you're buying, that's actually a common thing in restaurants where you're ordering 100 steaks, but you only sold 50. Where did the other 50 go? And it didn't perish.
Yeah.
So that's a common thing where people do literally steal inventory, and it literally does cost the business.
Inventory theft is leakage and bleeding. That's a major issue. I mean, and it's all about the inventory controls and everything. But so, with it being easy and stuff, what can companies do? And
that's the question, because now that we have scared the bejesus out of everybody that there's probably some fraud occurring, what are the threats to an organization, and what can an organization do to maybe help prevent it or catch it?
Well, so internal controls, there's 3 primary types of internal controls. There's preventive controls, detective controls, and corrective controls. So preventive is where you can set up, approval and authorization procedures like of checks things like that. Segregation of duties, that's a huge preventive control. We've alluded to that a few times. You don't have the same person doing the books and writing the checks. You don't have the same person paying vendors and signing the checks. You don't have the same person counting the inventory and filling out the inventory logs and doing the shipping. Things like that. Segregation of duties to where they can naturally check each other is a great thing. So you always kind of go in and an organization kind of look at who's in your organization and who's in a position to where the opportunity is there. And that's what fraud risk is. It's vulnerability within that fraud triangle is your fraud risk. Is there somebody with pressure, opportunity, and rationalization that could do that? And you want to minimize that opportunity. You're not going to do anything about the pressure. The rationalization is self-fulfilling. So you want to minimize that opportunity. You want to secure the assets, lock up inventory, put logins into computers, things like that. Those are preventive measures. There's detective, where you can detective measures for internal controls, where you can do performance reviews and kind of assess where the employee is at, where their peace of mind is, or get a lot out of, I need more money and I'm not getting it and I deserve it, things like that, which it can be legitimate. It's not on its own a red flag for fraud, but it's a part of it. None of this independently, you're going to see all this with anybody, and it doesn't mean they're fraudsters. I just want to make sure we say that. Another detective measure is you do reconciliations of, tangibly with bank statements, but also inventory reconciliations of the inventory report. You just kind of look over the financial documents and you check them. You check them with the source documents, things like that, and you kind of reconcile them. And that can detect something relatively easy if you do that. And if you have only got one person in the office that's been doing that for 20 years, the opportunity is ripe with that. You can do audits. You could hire outside auditing firms or do internal audits. So that's basically kicking up the cans and looking under the hood and just outright looking for stuff. And then there's the corrective part of internal controls. So that's where you can update your policies and procedures if you find something. You can increase your training and awareness. You take disciplinary actions. If you have somebody that's been committing fraud in your organization and gets caught, this organization does nothing about it, and they say, "Okay, that sucks that employee for 20 years was doing that. I hate it, but you know what? They're gone. Let's just leave it where it's at. The damage has been done." Well, you just created an atmosphere created a atmosphere within that organization that if fraud is perpetrated, it's not going to be
prosecuted.
And we don't have to talk about, it's not going to be punished.
Disciplined, yeah.
It's not going to be disciplined. And even if it's minor, even if it's not a fire, in your mind, I'm not going to fire somebody because they took home those 10 steaks.
It's like your own kid stealing from you and you don't do anything about it. Like, and the kid is probably going to do it again.
They took those 10 steaks home and you're like, oh, geez, he did it and damage is done. 50 other employees saw that happen. Well, I'm going to take a steak. He's not going to, if I just take one, that guy took 10.
What about if no fraud has occurred? Do you have to report it to a law enforcement authority?
It depends. There's a fine line, and if it's a criminal activity, theoretically, it's a criminal activity.
What about the tax ramifications of fraud?
Yeah, so I get this. This is a big deal where it's kind of lucky that I'm also a tax guy. Because imagine a situation where you find out this office controller has stolen $20,000 a year for the last 5 years, and they've been taken, and it's been expensed on your books, and suddenly you've been telling the IRS you had a $20,000 expense, which was really not a $20,000 expense. So the IRS
that you deducted, so now your deduction on your taxes is not correct.
So it's not only fraud, but it's also like, oh goodness, we just had a tax return. Inadvertently, that is wrong. So do I need to go back and fix those tax returns? What are the corrective measures? Now that I'm aware of it, do I need to fix that? Do I need to go back and do something about that? And there's ways to handle that. And I've done that in my fraud examinations where I find something and I created corrective measures from a tax perspective to protect the client from a tax perspective.
To make it right.
To make it right, correct. Because you don't want to do something wrong from a tax perspective.
So you've talked about the 3 types of internal controls. Now, what does, let's say, XYZ Corporation, what kind of how do I organize an internal control system?
Well, you got to start with the three objectives, which are your goals and the foundation of internal control systems. The three objectives are your operations. Your operations are like your purpose. What do? You sell widgets. Your reporting and your compliance. So within those three parts of your organization, the operations, the reporting component, which is, the financials and things, the external documents, and then the compliance, which is, do you have tax laws? Do you have laws within your organization? That's all kind of like three main parts and objectives of why an organization exists. Within that, you need to kind of filter down 5 components or actions of an internal control system. You have to develop a control environment. It's kind of like the top-down setting of the tone that, if that guy gets caught, we're going to do something about it. You don't have that CEO that's running around saying, I don't care, get it done. Even if you got to break the law to do it, just get it done. That's the control environment of not setting the right tone of the control environment. You got to do risk assessments. You got to do these fraud risk assessments and figure out where there's opportunity and things like that. That's the second component. The third component is control activities. You got to do things where you have actual internal controls. The fourth component is information and communication. You've got to supply that out. If you find something or change something, you got to have a communication and process to get that information through your organization. And the fifth component is monitoring activities. You got to monitor, keep tabs on everything. It sounds like a lot when you kind of break it out, but it's all kind of congruent, and it's kind of it makes sense. Monitoring activities, information, communication, control activities. You got to know where the risk is, and you have to have an overall environment of compliance and detection. So that's a lot about internal fraud. So from the very base, there's 2 threats to an organization. There's internal, which we've talked a lot about, which is your employees, your directors, your officers, things like that. There's also a major thing we can talk about is the external threat to companies. And there's sort of 10 in the common era, 10 common external threats. And we could talk about those for a while. One is ransomware. This is a lot of these are internet and web based. So you'll see both big and small. You'll see ransomware where you suddenly get a pop-up on your computer saying your computer's been compromised, your files are locked, and unless you pay us $100, and it's usually not huge, then we're going to delete everything. So people are like, well, heck, it's worth $100, so they pay that. Either it works and they get it back, or the people that did it were lying and they didn't really lock their stuff and they just got a free $100, or it was already deleted. You never know what's going on. The FBI says to never pay ransom, to let the FBI know the second it happens, even if it's small, because they have a database of keys to kind of get around some of this. They've been tracking this for as long as it's existed. And if you contact them, they may ask, get in their computer and say, put this key in, and it will unlock it. So you never know, but ransomware is a scary thing. It's scary, as any firm can imagine. Imagine if suddenly all your files on your computer you didn't have access to anything, or in your network of your large organization. And of course, sure, $100 would be worth it, but larger firms may pay $1,000, $10,000, $20,000. A hospital got compromised. All their client data got locked out to the point that they had to start turning around patients before they could get this unlocked, and they ended up paying $30,000. And then it got unlocked, and then it happened again a month later. And finally, they got the FBI involved to get it to stop. But a lot of them, they start with smaller fees and be like, just pay $100. And you're like, geez, okay, I'll pay $100. And they get you. What you need to do if that happens is you need to isolate that computer, isolate that network, get it off the internet. You prevent it, do backups. Do it that if they do lock you out of your computer, and what's the who is it, Al Pacino, that says don't have anything in that movie Heat. If you can't walk away from it in 30 seconds, it's not worth having. So I love that quote, but it's basically like if you dropped it out the window right now, you need to have a system that it's not, within 24 hours, you can be up and running again. You need to have those external backups timely. You need to have things like that. So if something like a ransomware happens, you isolate that computer and you start over again. There's this thing called tech support fraud. It's a little bit older than ransomware, but it's kind of similar. You're going to pop up on your computer saying, hey, this is Microsoft or Google. We've detected a problem with your computer. Give us a call. And you call and they say, oh, yeah, let us get in your computer. Oh, there's this major that your computer's about to blow up. If you give us $100 right now, we'll fix it for you. And that's called tech support fraud. It's a little bit lower than the ransomware as far as technicality of it, but it happens. There's chargeback fraud. So there's a difference between straight out fraud. So chargeback fraud is, say you ordered a belt
I couldn't read your writing. I thought it said horseback fraud. I was really excited to find out what horseback fraud is. But your writing is chargeback.
So chargeback fraud is like, say you buy a belt online, you pay $50, you get the belt in the mail and it's great. And you're like, but I just, I don't want to, I like the belt. I'm going to keep the belt, but $50 is a lot. So you call the credit card company, not the vendor that sent you the belt. Call the credit card company and say, hey, there's this charge on my card and I never got the product, or, it's fraudulent, whatever they tell them. And the credit card company will charge back the vendor and give you back your refund, and you still have the belt in your hand. And a lot of times credit cards companies will just automatically do that, and that's called chargeback fraud. So there's that, and then there's friendly chargeback fraud. So friendly chargeback fraud is, say last week I let my son borrow my card because he wanted to rent a movie. I was having a sleepover, and they rented a movie for $5, and I totally forgot about it. And I get my statement and I see this $5 charge or something. What is this XYZ? What is that? That I'm going to call them up. I didn't do that. And I call the credit card company and say, there's a fraudulent $5 thing. You get all scared that somebody stole your credit card and they charge it back, but it was legitimate. And that's what they call friendly. So what a vendor can do is make sure that when your credit card hits the statements, make sure there's adequate explanation as to what it is. Don't have some generic, I get this a lot with food trucks. I'm like, I see something like a statement. I'm like,
do you eat at a lot of food trucks?
No, but every now and then you'll eat at like a food truck or something random, and you're looking at your statement, you're like, what is that? $15? I don't remember. It's like to some XYZ something corp. I'm like, I have no clue what that is. I don't remember that. And then I think, and I look at it, I'm like, oh, that's that food truck I ate at.
But it was under some random name.
Yeah, exactly.
So
like it doesn't say like food, Taco Billy's or whatever. It doesn't say that. It just, so vendors can detect, because friendly probably happens more than outright just fraud. There's business email compromise. So there's a few ways this can happen. One mainly is, and I've gotten this specifically being a treasurer of a not-for-profit. I've gotten an email from the president of this not-for-profit, knowing that I'm the treasurer, because they put on websites who the board is, president, whatever. So I'll get an email from the president saying, hey, I need you to get 5 prepaid Visa cards and give me the numbers ASAP. I need to go buy something. They first emailed me saying, hey, how are you doing? I got a quick question for you. And I'll reply like, what is it? Because I know the guy. They're like, I need these 5 prepaid Visa cards. And then with the second they asked for that, it made me think, well, that doesn't sound right. So I look at the email, and either if you hover over the email, they can change the name with a different email. Or what they'll do, say your company is like ABC Company Inc.
They create a fake email.
They do the fake email, but it'll be like ACB Company Inc. And if you're glancing at it, you don't notice it. The letter transposed letters you don't notice. So
they can fish your email too.
They can fish. There's plenty of ways. So business email compromise happens a lot, and I've gotten, we maybe all have, but it can be scary because you're thinking, oh, the president wants 5 prepaid cards. I'm in a not-for-profit. Oh, let me get that to him because he's asking. I
had no idea that gift cards were such a source of fraud. But apparently they are.
Well, you get the numbers off the back and they can buy things online. And
I didn't know that.
Yeah.
It's vanity.
So, okay,
overpayment scams. What's that?
So this happened to me.
You got caught?
I didn't get, they attempted to happen to me. So an overpayment scam is this. So say Mari gives me some marketing services, and I'm from out of town, and she does this great work. And I'm like, thanks, Maury. And she charges me $200. I send her a check for $400. And I call her up and say, hey, I'm out of town and I really need to pay XYZ vendor, but he doesn't take checks and I don't have a credit card right now. Do you mind paying him? I gave you $200. Do you mind paying that XYZ vendor? I made the check out for $450. For your trouble, you can keep $50. Plus, you got your $200. Mari, I paid her $450. She's like, oh, yeah, no problem. That's great. Thanks for paying me, and I'll take the extra $50. Mari turns around and pays $200 for her new client. Well, 2 weeks later, the bank says that check was a fraudulent check, and Mari just paid somebody random $200.
That's actually happening a lot on Craigslist when people buy anything over $100 or a couple $100. Apparently, you sell something that way. Somebody will say, oh, I've got that, but I won't be able to pick it up, but I want to go ahead and buy it. I'm going to send you a check. Mm-hmm. And this happened to a friend of mine. So they got the check, and it was more than what it was for. So then they call them up, hey, your check was too much. And they say, oh, okay, that's fine. Just send me a check for the difference.
Correct.
And then what's happening is by the time they realize that the original check was no good, you've already sent them a good check.
Correct. And that's cookie cutter, perfect example of what overpayment scam is. I have a rental property, or had, no more, a rental property in John City a few years ago. And my office or property manager at the time called me up and said, hey, these people want to pay like for the 4 year up front. And I was like, well,
yay!
If they want to do that, okay. So they, the 4 year, I don't know, was $5,000, and they sent a check for $6,500. And they're like, yeah, we're moving there, but go ahead and take the $5,000, but we got to pay this moving company. Can you send that $1,500 to this moving company for us? And that's when I clued in as to what, So obviously I didn't do it, and I just replied and said, okay, yeah, sure, no problem, I'll take care of it. And then like 2 weeks later, they called. They're like, have you sent that check yet? And I said, no, So I kind of strung them along. Finally, I said, look, I'm going to turn you into the FBI. So that, and then I never heard from them again. But my point is it's a relatively sophisticated scheme and this is all external threats that people will just fish on you to do, and it can be scary. Those overpayment scams are crazy because you think you're getting the money. So in the example I use with Mari, she's out her service that she provided, and she's out $200. So you got to be careful out there.
Then I will come after you.
Yeah. Well, I'm like in Russia
people.
Or India.
I know people.
So I really kind of get a chuckle out of this vanity award scam. So have you guys ever gotten something in the mail that says you have been selected? You are best marketer of Western North Carolina.
Oh, man, that's not true. Are you serious?
And to get your award, it's $150, and we're going to mail you your plaque that says Maury Peterson, best marketer of Western North Carolina. And the thing is
you just busted my bubble.
So there's a difference between a fraud and a scam. This is a scam. They're not necessarily doing something wrong, but they just basically sold you a $5 plaque for $150. Mm-hmm. And it's, you're looking at it, and you're at the end of the day, like, XYZ organization, best marketer is like...
I see a theme here.
Like every other marketer out there.
I see a theme. The first few were about stupidity. That's tech. The next couple were about your greed. So you want that money plus the extra money. So you go for that. And then this one's going after your ego.
Yeah. Vanity. Gets them every time.
Mm-hmm.
No, but I mean, I've heard this a few times where people kind of utilize that to their example. I've heard where guys fluff their resume because they got the best entrepreneur of the year award. But you kind of look into that award, and it was an organization they created and gave themselves the award. So it can be used, and you got to be careful of these like best of award. Anything that's best of. I hadn't really thought
about doing that. Golly.
I know. Anything
I could create the top 100 marketing agencies.com.
Correct.
And I could be number one.
Correct. And you can give yourself the award.
Then I can give myself an award.
Correct. And hang it on your wall. So when clients come in, they see that you're the best marketing firm of
the top 100
of this marketing consulting organization that gives out awards.
Yeah.
But I mean, so it can be utilized. Vanity is ridiculous, and people might be like, oh my gosh, best taco shop in town. Heck yeah, I want to hang that on my wall. I'll pay $150 for that. That's worth it to hang that on my wall. Even if in the back of their mind, like, I have no clue who these people are or what that's all about.
I just got an email the other day that said we were the best new podcast that's been introduced.
Well,
But now
let's pay him $150.
I was going to send a check, and I guess now I shouldn't.
Yeah, but the thing is it plays to people's vanity, and it's like, I would love to hang that on my wall.
I'm just kidding.
And we have a local organization in town that does best of, and at first it was like 10 things. Now there's like at least 5,000 best of things, from like best of.
Can't you create like your
best
own
of hamburger, best of hamburger with cheese, best of hamburger with buns, best of hamburger with lettuce and tomato.
We could do our own best podcast by an Asian and a white guy.
Correct.
Okay.
But I mean, my point is it starts becoming silly at a certain point, and people buy into it. And when we get these best of things, people go crazy for it. And then I'll go down, like there's best of accounting firm. I'll go down and I'll see an accounting firm that has a huge sign on their building that says best accounting firm of WNC voted. And you just got to be careful of stuff like that, and don't. If you want to be $150 for a $5 plaque, then so be it. But it's a scam.
Don't bust all those bubbles out there, John Michael.
Phony invoice schemes. That's
common. That's really common.
So what happens is the sophisticated scheme will be the perpetrator will go through your trash in the dumpster in the back and see that you get an invoice from XYZ paper company for $35. So he'll send you a fake invoice with a new address and a new payee from XYZ paper company for $35.
That's really good.
And you will be like, oh, it's just another one of those, fine, and you pay it.
Mm-hmm.
So that's non-sophisticated is they just send you a bill. Mm-hmm. And if you're a big enough company, the account payable person might be like, what's this $500 bill for XYZ plants? Whatever, I guess somebody ordered something. Let me write them a check. So, and then you're just paying something that's not, you're just paying a bill. So anyway, so that's that. And then we did the advance fee.
Mm-hmm. Oh, business identity theft. Everybody knows about that.
Yeah, that's basically.
What's a search engine optimization scam? I'm particularly interested in that one.
That is, if you get somebody saying, I guarantee you number one Google search, pay me $100 and I guarantee you to be number one in the Google search. And
there's a lot of marketing scams.
There's no way that can be measured or known. And there's a lot of that. And a lot of times they go out and they start with the smaller fees. It's only $50 and we'll put you at the top of the search engine every time. So search engine optimization scams are just, little nickel and dimey type things trying to get something out of you to push you to the back. So remember, there's scams and there's outright fraud. So, the scam, they may do nothing and take your $50, or they may try to do something, but they just aren't doing anything. But either way, it's a scam. The best of is an example of, sure, you're getting a plaque, but you're getting best of, nothing. But anyways, things to keep in mind.
Well, we have covered a lot about fraud, both the ins, the outs, what certified fraud examiners do. And in our prior episode, we really gave you some good examples and history about fraud, the types of fraud, as well as in this discussion, what you can do to, correct, assess, and prevent fraud as well. Just
remember, the number one deterrent of fraud is appearance of oversight. And just ask those questions, turn the leaves, look, and segregate those duties and do some preventative measures. And good luck out there. It's a, scary world when fraud's involved.
So we want to say thank you for joining us today. Please be sure to review this episode. And for more information on who we are or this podcast, please visit www.bammit.com. That is BAMM-IT.com. And join us for our next episode where I'm going to talk about OTT, the future of advertising on TV. We're going to talk about cord cutters and cord nevers.
Cord nevers?
Cord nevers. Your children will be cord nevers.
Like never have cords?
Never have cable.
Ah.
So we'll go there next episode, and thank you very much.
Thank you.
The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice and is for entertainment purposes only. The hosts and guests of this podcast may make terrible attempts at being funny, and this podcast does not defend the merits of this humor, nor does it guarantee that the humor will be successful. It is not guaranteed that you will find this as entertaining as the hosts find themselves.